looking at, for example. But one of the things you'll probably start to recognize, for example, we showed it this morning, is this chart here. Look at this chart here, guys, from the pre-Fed to the post-Fed. You might be saying, what the hell even is this madness? What the hell is that? It's a 15-second chart, and it's the PREM. What is a PREM? The program trades. Are the program buyers or the program sellers? The banks buy and sell this thousands of times a day. This is what the majority of algorithms are looking to try and do in the olden days. This is basically the banks sell the blue line and the banks buy the blue line, and they'll never lose money if they can achieve it. They'll never lose money. It's impossible. You may be saying, how is it impossible to lose money? I've seen it going a lot higher and a lot lower. Yeah, but they just sell more and sell more and sell more. They will sell more and they'll sell more all the way through this phase, and they'll buy all this phase here, and they cannot physically lose money. This is pure arbitrage. This is pure arbitrage. It's not statistical arbitrage, which is a probability distribution. This is 100% arbitrage. You cannot lose money on this unless your execution is appalling. And how we use this, of course, is to look for buy and sell programs. Now, before the Fed, and this is post-Fed, this is the Fed kicking off here, and the market goes crazy. Volatilities between the markets are madness. Prior to that, of course, this is what it looks like. Now, inside of this, one would imagine you can all recognize what a buy and a sell program looks like. It's very obvious because you start out by understanding where fair value is. So if I give you a fair value read, for example, here, this should always just chop and change behind this fair value. When it doesn't, for example, here, when it doesn't, for example, here, and when it doesn't, for example, here, you know that there are institutional algorithms selling the market during these phases. There are significant institutional algorithms selling the market during this phase. Now, obviously, if you were to look at those sell programs, you'd start to recognize what I mean by a sell program. They're pretty obvious, I think, on the charts. If you do a moving average, of course, it should show up quite clearly because obviously there's a lot of pins on these. So the average price in here shows how much pressure is being applied to the sell programs. We trade this line. Oh, yes. We trade this line. We've done many classes, in fact, on this line. And through those many classes, you may well have been able to recognize the trade opportunities to maybe take part in some of these opportunities. There are many opportunities to take part in the PREM, of course. There's many opportunities to take advantage of some of these sell programs. But I wanted to show you what I'm talking about these sell programs kicking off. Here's the S&P sell programs with a moving average. Take a look at these trades here. You can see quite clearly that there is a sell program kicking off here. You can see quite clearly that there's a sell program kicking off here. So you can recognize the opportunity to get massively short into this. Now, this fitted in with other narratives that we were evolving into. So this isn't a surprise. This is what we were looking for. This is what we were looking for. And obviously, in line with what happened next, of course, was we got that huge sell-off on the Fed. And obviously, the sell program started to buy, and then the buy program started to sell. And then we had this brilliant bottom edge buy program that kicked off later on in the evening session here. Brilliant buy program kicked off there. And all we started to do then was watch for the buy and the sell programs annihilating everybody else. And it wasn't just the S&P sell programs. Oh no, it wasn't just the S&P, guys. These programs were kicking off on the NASDAQ as well at exactly the same times. And that makes life so much more interesting. I'm just scrolling up so that I can find it, so you wonder why the screen's gone off the top edge. So when you start looking at the S&P and the NASDAQ, you start looking for these things, don't you? You start asking the question. And there's the answers. So it's not just the S&P that's having sell programs kicking off, it's the NASDAQ as well that's having these sell programs kicking off. So it's not just a specific index, it's both indexes. And this just looks amazing as a trade signal, doesn't it? It looks absolutely amazing as a trade signal. And you can see, in most cases, the thing I said before about this particular signal inside of the classroom from a while ago when we looked at this over the course of a week was the one thing you'll never find me doing is trading against this signal unless I've got a very, very, very strong case to be selling a macro trade at higher prices. So this is what we've got to try and look at in terms of this not necessarily the classroom, but this is what we've got to try and look at is we should never try and trade against an algorithmic buyer, and we should never try and trade against an algorithmic seller. What we should do is recognize that they're there and then deal when it's very obvious. And when we look at that narrative and we see obviously the spikes, it's obviously very difficult to get anything out of this because there's too much noise. We can't really see anything during this phase here, but obviously what we're going to be watching for now is any change to the algorithmic buy or sell programs. Well, there it is. You can see that both algorithmic buy and sell programs go bullish here, and that puts in a bid at the bottom edge of the prior swings. That puts a bid into this volume low print here. And there's your buyable opportunity to take the trade. Now, am I going to buy it? Possibly. Am I going to sell it? Possibly. You know, this doesn't tell me what to do. It tells me what not to do. So in other words, if this is going up, it tells me I can't sell it. Can't sell it. Do I want to buy it? Well, because that's going up, it's going to be back to the zero because it's an arbitrage. Arbitrage isn't directional. That's the one thing you understand is arbitrage is not directional. So there is always this component piece to this, that this is not going to tell me whether to buy it or sell it. What it's going to tell me is not to do. Because if it's going up, it might not necessarily be a buy program. It might simply be an arbitrage getting unwound. It might be an arbitrage getting traded back to fair value. And as a result, I just don't want to be a seller when it's going up. To be a buyer, I need to see other evidence. And that's what we're going to be looking for. So this afternoon, we'll maybe take a look at program buys and sells so that you guys can understand it, because obviously it's pointless if you don't understand what these program buys and sells are all about. But obviously into the close, we can start to recognize a few more buy programs kicking off. For example, in here, we can see there was a nice buy program setting off just in here. Nice opportunity to buy into it. You can see there was a possible little sell program kicking off the top edge here. And then obviously there was a big divergence into the 8 o'clock phase when the dealers are starting to come to their desks. We start watching for that dealer phase, and the market's now settled, hasn't it? The market's now settled down, and you can see it, the settling down phase. Look at this, coming into 8:30. Look at what's happening. NASDAQ sell programs, S&P sell programs, coming into 8:30. Well, what did we tell you happens at 8:30, guys? What did we tell you happens at 8:30? The dealers rebalance their books. So when the dealers rebalance their books, you're expecting to see sell programs kicking off. So when you're expecting to see sell programs kicking off, you see it already starting around about 26 minutes past, 27 minutes past. And then what happens next? We start to see some buy programs kicking off into this phase here. 8:37, and you say, okay, well, if that's what they're going to do, I'm going to try and take advantage of that little bit of knowledge. And boom, look at that trade. Look at that bloody trade. It's unbelievable, isn't it? And then we see the big volume coming into 840s, big volume at the top edge. You can see, wait for the NASDAQ, wait for the NASDAQ. Right, the NASDAQ's out. Let's get busy. Let's get busy. There's your top edge sell. And boom, down she goes like an absolute cracker, isn't it? Into the bottom edge, the NASDAQ's still selling. The S&P's got a small divergence. So no trade really in that stage. And then into the close, you know, you've got a little bit of business here, but I'm not going to start doing this type of business at this stage. This is all fundamental stuff with rebalancing. So I'm not going to be paying much attention from 850 onwards. So the last time I use this is usually about here. The last time I normally look at it is here. This is usually just nonsense. Usually just nonsense. So we'll watch this afternoon, guys. We'll put it on the screens and we'll take a look at this, because obviously in the afternoon session, of course, it's just the price. You can see it's just the price. It doesn't have any information whatsoever. So it only kicks off again into the US Open, and we'll be able to take another look at that as we get into the session proper. Now, obviously, as I said before, you know, when we're looking at things like buy and sell programs, there's lots of places we can get that information, isn't there? There's lots of places we can get that information on the internet. One of those places would be indexarb.com. We can look at the indexarb.com site, for example, and we can get fair value for the S&P, the NASDAQ, and the Dow Jones. We're not interested in these thresholds. They're all bunkum, absolute bunkum. But what we can use is we can use the fair value reads just to get an average price. And obviously we can just put that on the charts, but you can eyeball it anyway. It's not exactly any earth-shattering information. It's just the fair value price. It's a standard official calculation of where fair value is for the S&P against the index itself. Anyway, where are we in terms of time? We are just coming up to, just coming after 2 o'clock. So we're going to grab a bit of lunch, and then we'll get cricketing on this afternoon.